You have to allow some measure of, well, I guess, inconsistency in the beginning, because you're learning, you're fumbling while you're learning how to do this. And that's all normal. It doesn't feel normal. It doesn't feel comfortable. It's not encouraging when it's happening. You need someone to just say, hey, look, this isn't going to happen for you anymore after that time or that instance of you falling down. But falling down is part of that process because you learn how to endure. How can you ever possibly learn to come out of drawdown, which is going to happen to all of you? You are all going to experience a series of losing trades. No matter how much you learn from me, no matter how well you get good at doing this, you're going to have a series of losing trades. It's unavoidable. You cannot avoid it. I cannot teach you how to avoid that. But you will encounter it. Now, pray tell, how on earth do you believe you're ever going to come out of any drawdown, ever, unless you have encountered doing it wrong at least once, without emotion, without having a meltdown, without thinking, oh, this is different. They changed the algorithm. They're moving on ICT. It's the new retail, believing everybody out there that has all these stupid ideas. You ever missed a day of work? Oh, well, I didn't get to go to work yesterday. I got the flu. You were really sick. You really did not feel well. And you didn't go in. And guess what? Those are hours not earned. So you're short on the pay. Well, I don't have the paycheck that I usually have. Might as well get another job. That's exactly what traders do. What? I took a loss. Well, it's time to go back to the drawing board. Let me see who's hot right now on social media. What are you selling? I don't want to take another one of those losing trades. If that's how you think, if that's what you know about yourself, don't trade. Don't even get into this because you're going to have losing trades. You're going to have lots and lots of losing trades over a long, long career if you're going to be a trader. And that is absolutely part of this lifestyle. And anybody that tries to sell you the idea that it's not is lying to you. They're making up something. They're wrapping up with fraud and deception, and they're leading you down the primrose lane. And I'm trying to just remind you that there's a right way to do this and there's a wrong way to do it. And there's the wrong expectations and there's the reasonable expectations. And I'm simply trying to be a voice of reason, calibrating you. That's all. Just trying to remind you, this is what's normal. This is not normal. And these are the right steps to get to excellence. But you have to have a topical study approach and limit your study in the beginning. And I don't care if you've been studying me for a while. If you're not consistently profitable and you don't have a model that you stay adhered to all the time, you never deviate from, this applies to you too. Anybody that has a consistent model that they're profitable with and they don't do anything else, they see anything else I make a lecture about or talk about, they don't care. I don't care what he's teaching. Dude, I'm making money. I have something I'm working with right now. I don't need to tinker with it. That's exactly what I taught. Once you find that for yourself, lock in and block everybody, including me, out. I've done my job. I pointed the way. I was a conduit. You learned. You made it yours. You're making money. Goodbye. Goodbye. Get out of the nest. It's time for you to fly. I got other children to raise up now, and I need the space. Get out. Happy flights. Good luck. Enjoy your life. That's the dichotomy here. We don't have tethering here. That's not what this is about. If I was a cult leader, I would keep you all attached to me, tethered to me. Pay me, baby. Pay for my time. That's what a cultist would do. I'm cultivating independent thought. Independence, that's what you really want. Maybe you haven't qualified and quantified it and identified that for yourself, but that's exactly what everybody wants. They want their time to be their time. How they want to spend it, what they want to do, when they want to do it. I don't want to do that today. And guess what? I don't feel guilty by saying no. That's freedom. That's excellence. Topical study. Give me some ideas, IT. See? Come on. Give me something to work with. Give me something to get my hands into now. Okay. Opening range, first 30 minutes. 9:30, 10 o'clock. Every day this coming week, your obsession is that only. Now, since it's a topical study, you can do what with it? You can do it over a couple different markets, not just NQ. And you will learn to see that there are repeating phenomenon happening in all the other markets at the same time. They're not one-trick ponies, okay? That's how you know it's algorithmic. They don't have this same algorithm, this one algorithm that drives all the markets. You're right. They don't have one algorithm that is tentacles into everything and it's controlling all the different. No, every individual asset has its own script it runs off of. And what do you think that script is? It's the same source code. I don't want you to believe me, okay? I don't want you to believe me. I want you to go out there and try to debunk it. I want you to look for evidence to be the contrary. I want you to do that because when you do this, I got you. Just like that. I got you. Because you will never be able to wrestle away from it saying, no, it's not there. Because you're going to see it. If you live this life as a speculator, never looking for evidence, never looking for signs and proof that there is a script behind price, it's no wonder you're never going to recognize it. You're never going to see it. But when you're going in and looking for clues, looking for evidence, the breadcrumb trail that's left by it, undeniable. Undeniable. And how can you prove it? Because it's happening at the right time. All the time. All the time, on time. That's what the algorithm is. And so you're not trying to beat the market. You're never going to beat the market maker. You're never going to beat them. The only thing you can do is ride on the wake that they leave behind. They can't hide it. They're never going to be able to hide it. And that should be an encouragement to you. And by looking at a topical study each week, the opening range, what does the first fair value gap do in that 9:30 to 10 o'clock? How is it used that day? How is it used for the rest of the week? How is it used in the afternoon session? How does the first opposing imbalance, for instance, let's say, one of my students also asked about this. He's probably tickled right now because he knows where I'm going with this. Let's say, for instance, the first time the fair value gap forms in 9:30 to 10 o'clock in the morning Eastern time. So you say the first moment it forms, and it happens to occur on the basis of a down closed candle. So it's a SIBI, sell-side imbalance, buy-side inefficiency. So down closed candle, imbalance, lower close. If you're bullish, if it trades down into that and stays with the bodies in the upper half, that's indication that it's likely to start spooling higher and order flow should be delivered on a bullish bias. That means up closed candles and then any down closed candles support price. That's the dichotomy. Once you see that, it goes boom, 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 boom. That's your logic. That's what you roll into. That's your thought process. The very first buy-side imbalance, sell-side inefficiency that forms immediately, same time frame, after that first presented fair value gap, that's a SIBI. You want to recognize the first fair value gap that's a BISI. So it's the opposite of what the first presented fair value gap is. Okay, so if it's the first presented fair value gap, it's a SIBI, down closed candle. The first bullish up closed candle fair value gap, BISI, you want to start tracking that one too. Carry it through the rest of the week. Not just today, not just into the afternoon, carry it for the week. There's this relationship there that I want you to see for yourself. Not just today, carry it through the week, okay? That's your topical homework for this week. Don't just do it in NQ because it's very simple. It only takes a minute to pull it up in your charts and click extend right. And then there you have all the information to study. So you can do it with multiple markets because you're doing a topical study. You'll be able to glean a lot of information from that. And you can do it with old data too. You can go back to the left, dig into old days, goes back as far as you can. And gather a lot of examples in chart form and annotations and be excited about what you see, because you're going to see that there are very stellar setups in price action, price runs that were like, wow, that literally keyed right off of that. It did everything ICT talks about. Stayed in the upper half, stayed in the lower half. It presented itself perfectly at the right time. And all these things will repeat. And all of a sudden, what will happen is, by having a topical study mindset each week, you go into deeper understanding about that one topic. And there's 52 weeks in a year. Whether you're trading with real money or not, you got 52 weeks where you can do topical studies. Man, you could learn a lot over 1 year doing topical studies like that. When does the daily high and low form? You can add that in for the week as well. What constitutes the daily high and low? Where does it form? Why did it form? And you need to be very diligent about explaining to yourself in hindsight why it formed there. What liquidity did it take before it did it? What liquidity did it run to purge? What offset distribution was underway when the price rallied up above an old relative equal high or an old high and singular high? What was the primary function of price going there? What took place beforehand? Where did smart money get in? Do you have examples of that in your charts? Do you have examples in your study journal where you log that? I promise you, if you haven't done that, you're missing a great opportunity to understand all of the underlying pinnings of the marketplace that is alien to you, because you're not looking for it. You're not actively pursuing it. You're just waiting for the next thing I'm talking about. When I've already laid down a compendium of things for you to, for the rest of your life, you have a rich tapestry in front of you where you have literally unlimited opportunity to make yourself better at reading price action, which is necessary before you ever learn how to trade. Because before you ever learn to do the entries, you got to learn how to know. That doesn't sound good to other people in the industry. Predicting price is impossible. No one can time the market. Don't bother trying, because no one can do it with any measure of consistency. Yeah. That's how you know this stuff's going to keep working. Oh man, it never gets old. I love it. Some goober every single week literally shows up. ICT, listen to me, man. Nobody can time the market. Okay? You can't do it. The market's random, and you're just going to have to do it, like everybody else does. Guess. It's silly, isn't it? If you've been around for a while, you know what's up. It's silly. That's silly. And these people try to comfort themselves with that drivel. It's nonsensical. It's comic strip level lunacy. We know when they're going to change lanes without a turn signal. We know what song is playing on the radio before we turn it on. To everyone else, it looks like a cult. To everyone else, we're egomaniacs. No, we're just dialed in. We're ahead of the curve. That's it. That's all it is. And we're not trying to keep anybody else out. Come on in. There's plenty of room. There's plenty of room here. I got a table with all kinds of seats waiting for any of you to come sit down. It's free. It's free. Free gold. Free platinum. Free diamonds. All you have to do is apply yourself. Quit at any time. You're under no obligation. How's that feel? Hard to trust it, isn't it? I understand. It's too good to be true until you realize it's the truth. And what happens when you get to do this for a while and you get real comfortable with picking when the market's going to run, how it's going to run to, where it's going to go to? How do you know it's going to go to that level, ICT? Because I've done this for a long time. I've back tested. I forward tested. I watched price for a long time without taking trades. And then when I took trades, I did it with really, really low leverage. For me, I had to trade mid-am contracts. Mid-am contracts was kind of like a halfway point for commodities. You had the full size contract, and then you had a mid-am. It was a partial contract. That was it. Unless you traded an option, that was the only choices you had. And we didn't have Forex back then. We had currency futures with mid-am contracts. But now you have the luxury of minis and micros, and with Forex, you can dial it down to like a penny. Like you have such a degree of customization that I didn't have. So you have no reason for you to blow out your accounts. You have zero reasons for that. But you have all the reasons in the world to prove that you know what you're doing with the least exposure. And even that should be done after 6 months of proving that you can call price action in your own hands. It does exactly what you think it's going to do, candle by candle, and you're consistent with it. It doesn't mean you can't be wrong, but if you're wrong, it doesn't undermine the level of importance you've placed on the model you're trying to adhere to. That's excellence. Not insanity where you're trying to do the same thing over and over again, which is undisciplined, expecting a different result. You're going to be consistently inconsistent. That's what you're going to get. But because it's not what you want, you're going to go mad. You're going to desire something else to fix your problem. And you're going to reach outside yourself and blame other people. It may be your spouse. It may be your own children. It may be your coworkers, your friends. And you're going to alienate these individuals because your level of discontentment with yourself and your unbelievably unable to get to this level of consistency because you're trying to do things that's never going to make you arrive there. And you don't even recognize what it is you're doing because you're being stubborn. You don't want to listen to people that know how to do it. You don't want to listen to someone that's doing it. You don't want to listen to someone that's proving it. You don't want to listen to somebody that's got an army of people out there doing it on their own. I don't give signals. I don't tell people buy this, sell this. I don't do that. And they're making fortunes. And these companies out there are allowing it to be public record how much they're taking from them. That's undeniable proof that it works in other people's hands. And that's all I want you to do is let it work in your own hands. But you have to give yourself time to get there. If you force it all the time, you're going to fall short. And that falling down in any other measure of approach where you're not forcing the income, you're not forcing that you're profitable right away or in a short period of time. If you're allowing yourself to defer immediate gratification and look at the craft, the science behind what it is you're doing. Because money, listen to me, folks, making lots of money doesn't make uncertainty go away. You can make lots of money, but you will still have doubts about what it is you're doing on the next trades. I have students that do that a lot. There's other people out there that make money trading weird stuff that I don't have any affinity for.